U.S. Farm Report on the Road from Commodity Classic 2026 is brought to you by Syngenta, introducing Enlist E3 Expanse soybeans, the next generation of herbicide-tolerant soybean varieties from Syngenta, and MS Technologies, LLC, by Brandt, reduced drift, improved coverage, greater control where it counts. The new line of Brandt adjuvants brings next-generation performance to every application, precision that profits. By Helena Agri Enterprises, where innovation never stops. And by the Soy Checkoff, investing farmer dollars to boost demand for U.S. soy, drive on-farm resilience, and bring value to U.S. soybean farmers.
Welcome back to U.S. Farm Report. This weekend we are live here from Commodity Classic for our live U.S. Farm Report taping, and excited for the panel today because we have Chip Flory, Naomi Bloom, as well as Arlan Suderman joining us. There is a lot to discuss right now, and Arlan, I want to start with you because EPA did send its proposal for new biofuel blending volume mandates to the White House on Wednesday. Is there any talk of what those possible levels will be?
Yeah, there's plenty of talk, but we don't know for sure, but we have some ideas on what it's going to be. First of all, we saw the proposal, and that was very, very positive. And then we had the biggest increase in demand for feedstock on record. Then we had the small refinery exemptions. We go, oh, we deflated the balloon because we're giving so many exemptions away. But they cleared the House finally all the way back to 2016. Got that all out of the way finally. That's not hanging over us like a dark cloud anymore, but what are we going to do with it? And first of all, most of those years they said, too late anyway, doesn't matter. So what are we going to do with it? So there's about 5 different scenarios that could still come out of this. So there's a lot of variability, but what we expect to happen is 50 and possibly up to 75% of the small refinery exemptions would be put back in for larger refineries. Now, what we don't know is over how many years that'll be. Will it be over 1 year, 2 years, or 4 years? So that makes a big difference. So that's a big factor. The other thing we don't know is what will they do with the 50% credit, RIN credit, for imported feedstock. And there's been a lot of pressure to move that back up to 100%. It could be something in between. It could be 1 year it's one thing, the other year it's another. But regardless, we see most all the possible scenarios here as being positive. And we think that right now, the way the industry is geared up, the biggest thing is not what the numbers say, but just having certainty. And once we have certainty, it's going to take 45 to 60 days, we felt like, to really get the industry going. Except for in anticipation, we've already seen enough of a RIN rally that yesterday we got RINs up high enough that we can start profitably making renewable diesel. So we may ramp it up a little bit quicker. So that's positive news. Probably looking at 2 to 4 weeks to hear. We're going to say 3 weeks plus or minus to get it finalized.
Well, and Naomi, before I go to you to talk about market possible reaction, on Thursday, Chip, there were reports that the Trump administration plans to reallocate at least 50% of exempted biofuel obligations to big refiners. There were signals it could be higher. Those were just reports. I know you've had conversations here at Commodity Classic asking, is this true?
Yeah, Robert White from RFA, Kurt Kovarik from Clean Fuels. They were both on the show on Thursday, and they both said, listen, I know what the buzz is. The buzz is that it's going to be half. Sometimes the buzz isn't right, like Arlan is talking about. Could be up to 75%. I think there's still hope that it's going to be 100%. In my mind, with the way that the trend was going, even at 50% reallocation, I'm going to call it a win for the industry.
But we are expecting this then because the EPA did send this proposal for the blending volume mandates to the White House Wednesday. That kind of sets the stage. That timing is key. So before we get into the timing, though, Naomi, we saw what happened when these proposals came out last summer. Soybeans responded extremely positively. Is the market set up possibly to do the same this time, or if we had just too much time to digest what the possible outcomes could be?
I feel that demand focus and that demand is starting to get factored into the market, that we know it's going to be future demand. If we came out with this information and they said it's going to be full bore, we're going to have this, sooner than later, the market still could respond with higher values. My thought is goes along with what Arlen was saying, is how long does it actually take to fully allow this to come to fruition? There's also the balance of governments wanting to not have food prices go too high too quickly, especially with this administration still trying to bring beef prices down. So I don't know that they're going to immediately give us all of this great news that we're wanting, because they don't want to spook prices and make demand go up too quickly. So I'm on the slow roll carry out, which would be bringing that demand up, but slowly over time. And we're right at a perch for market prices right now. Corn, beans, wheat, all near some short-term major resistance levels where we're waiting for fresh, big new news. If we can get some new bullish news, either bad weather on the safrinha crop, great news regarding the biofuels, we have reasons for this marketplace to explode higher. However, if we do not get good news soon, seasonals could kick in, prices could slide lower into March, as they usually do when corn, bean, and wheat prices sliding lower all the way potentially until the March 31st report.
So the timing of this is critical.
Timing is critical.
Yeah, the RVO decision, I think, is so important. It's more important in my mind than E15, getting it done. And what Arlen said about the certainty is so spot on, because the biomass-based diesel refiners, we're running at what, Arlen, 60, 70% capacity?
60%.
Okay, call it 60. If we all of a sudden have to ramp this back up to 70 or 90%, 95%, we're going to use all 17 billion pounds of bean oil in the year ahead that USDA says we're going to.
We've known for a while that we're possibly going to get this from EPA. The expectation was by the end of March, okay? So we've known that timing. But what's interesting is the timing piece of it. Also in April, we know that the U.S. and China are supposed to hold trade talks. And so, Arlen, is the timing all of this really key as farmers head into planting, and actually will be probably in the middle of planting when we get some of this discussion?
Yeah, I talked to Lance yesterday, who heads up USDA NASS on the survey, and I said, how long are you going to leave the survey out there? And he said, typically 19th is about the last we can take it. Most of the surveys come in front-loaded. Two big critical factors that will impact planning intentions are the RVO and trade deal with China.
Yeah.
If both of those come in favorable, that could have we could see soybeans having to buy acres. We won't know with definity anything until after they finish getting the surveys in. So if that's the case, we'll be waiting until the June survey to really feel like we have a handle on the number of planted acres. That'll be the date. Exactly. Nothing new there is there. So that's the big thing that's going to keep us guessing. But those two factors could be huge.
But Naomi, when we had the Ag Outlook Forum last week, and I know this isn't survey-based, but USDA's first look at acreage said 94 million acres of corn, about the same that they said last year.
Right.
Do you think there's a chance that we actually plant more than 94 million acres of corn this year in the U.S.?
So I guess my thought would be that we're going to plant less corn than last year.
Right.
But is it going to be 94, 95, or 96? That's the question to what we're talking about.
Yeah.
Is it going to, are we going to know that in March? Or are we going to know that in June? So.
Or September. Or
right. So, but the bottom line is that with the 94, 95, 96 million acres, including trendline yield, as good as demand is, you're going to have carryout for corn near 1.8, 1.9, or 2 billion bushels, unless we can get some of this renewable stuff happening fast. So there's not a lot of reason for markets to really accelerate higher unless we get the strong demand news, or again, unless something goes terrible with the weather on that safrinha second crop corn in Brazil.
Well, when you look at the price, the high price of other commodities right now, is it possible that corn, soybeans, is it possible we could be the bargain buy this year and get some of that interest, Arlen?
That's what I'm looking for when you look at what do the funds want to own if we see a return of inflation pressures.
Yep.
The highest correlation over the last 10 years has been the grain and oilseeds to the CPI, followed by energy. And those two sectors are what the funds are watching to have their money in their portfolio if, in fact, inflation does start to rise again.
Yep. Well, two other things to keep an eye on also. If things flare up with Iran, that's going to be a game changer for crude oil, which would pull corn prices higher, which I feel would be something where we could see some money flow into grains. The other thing I'm keeping an eye on is palm oil over in Malaysia. They're having some too much rain right now, and that's affecting production. If they've got lower production, then maybe we see a kick up for soybean oil demand here. So you have to keep an eye on some of those outside influences as well.
Yeah, California E15, we've got one last hurdle to clear to get E15 into the state. I think that has as much potential to impact E15 and ethanol demand as nationwide availability.
Chip, Naomi, Arlen, thank you so much for joining us. We appreciate it. We need to take a quick break, and then we'll be back with much more U.S. Farm Report.